What's up, folks? It's Eric with Success Over Stress. You know I normally look at TQQQ, but today and yesterday I'm doing a little something different. So TQQQ is a leverage index ETF that follows the Qs. The QQQQ. QQQQ looks at see what's going on with the index, the nasdaq. Nasdaq, the index is pretty much going to follow the larger cap stocks such as Apple, Meta, Amazon. Who else is up there? Alphabet, Nvidia, all those. So I figured what I'd do instead of following TQQQ is to follow the ones who make the moves. So Google, Microsoft, all those. All right, so today I decided to dive into Google. All right, so I'm using the Tradestation Easy Language platform, which is a coding platform that allows you to actually just develop your own scripts, come up with your own logic, and with that you can make indicators, you can make you can paint your bars, you can paint the candles on the stock, on the chart analysis. You can do a lot of different things. So here is part of the logic, part of the code that I created with Google today. So it's about half of the conditions. But you can see here, what did I reference? I referenced anything from the position of the high in relation to the moving average. I looked at the amount of volume that the candle has in relation to the moving average of the volume. I looked at, well, condition 7, it references another value, so that's up higher. We don't know what that is unless we look at the code. The XA200, that's the exponential moving average of the 200, so I looked at that. We know that that's pretty significant. Everybody looks at the moving average of the 200. All right, so if you just look here at Google just in general, it's been trending upwards nicely. I hope I can erase this when I get done. But it's been trending upwards nicely, kind of retraced, hit a support there, if you call that a support. And then, so from 2003 on, we're moving backwards. We're moving back into an uptrend, if you will. So clearly it hasn't crossed that crest yet, but maybe it will. All right, so then if we look at Google on the 1-minute chart for today is August the 3rd. You'll see, and I wish I could zoom in on this. I can't zoom in on it. But yeah, I can't zoom in on that. All right, but you'll see that this area here is the first bounce of the day. This is the second bounce of the day, so we call that the double bottom, or the double bottom W. Yeah, the W. All right, anyway, so after we identify this on the 5-minute chart, so this is the 5-minute chart, so we're not really taking any of these trades because we're waiting for this to happen on the 5-minute chart. And so then after that, we're looking for these bounces here. You see all these green dots here? That's why I wish I could zoom in on all those green dots. That's what my algorithm coded for. All right, so with the algorithm that I created, it identifies these green dots. Okay, this area in particular, this retracement, I didn't want to capture that. I didn't want to get anything there because obviously if you're going long in a downtrend, you're more likely to lose money, more likely to get stopped out. So what I did was I came up with part of the algorithm that references these blue lines. These blue lines are, they capture the swing high, right? So that peak there, that top, that's a swing high. So we want to have 5 candles on one side, 5 candles on the other side. When you have 5 candles on one side or the other, that apex is your swing high. So if we have a swing high up there, then we don't want to enter on any bars that are near that swing high. You can, that's up to you, that's your discretion, but then you're really looking to be a breakout trader. And I'm not looking for breakouts right here, I'm looking for the dips. So like I said, part of my code identifies this swing high here. And if any of the candles are within that strike range of that swing high, we're not going to take them. Okay. All right. So, and obviously we see these swing highs here, swing highs here, swing highs here. And so we're not taking any of those until those swing highs are done. All right. Let's see. Yeah. And I don't think I'm going to be able to get rid of this. All right. So that's just going to be on the screen. All right, but you can see after as it zooms in here, there we go. All right, that's one way to get rid of it. You can see as it zooms in there that we have these, you can see better the green dots. Boom. in all of those dips. I mean, that looks pretty successful, right? So I could put that in a strategy for sure, and it should make some money. So maybe I'll do that for the short for the day. I'll just put that in a strategy and do a risk to reward ratio, and just give you the result of how it performs. All right, so again, just identify the 1 minute entries after the 5 minute entry is confirmed. That's all we did today. All right, guys, this is Eric. I'm with Success Over Stress. Please like, subscribe, put in the comments something that you like to see. If you'd like to see me do a strategy a strategy on a specific day, so put that in the comments. So if you'd like to see it on a specific ticker, on a specific day, on a specific time frame, if the strategy is fairly simple, if it's fairly simple. Now, I don't do a lot with other indicators. I create my own stuff, so I don't do a lot with stochastics, Bollinger Bands, Fibonacci retracements. I don't use any of those indicators. I use my own stuff. Okay, so but if you have a simple strategy you want me to kind of employ to see how it looks, to see what it would look if we back tested it a couple weeks or something like that, put it in the comments, and I'll get it to you as soon as I can. But again, you gotta subscribe, you gotta like, you gotta comment. All right, peace.